These are the top 5 most profitable Forex strategies of all time. These strategies are so profitable that people sell them for thousands and thousands and thousands of dollars. You'll often see these strategies inside of numerous styles of Forex courses. The moving average crossover, the Fibonacci bounce, supply and demand, FIREZONES, stochastic, etc. News or session-based type strategies. So let's really break down the brain behind creating a Forex course. It's usually a mix or, a few of these things here. If you can learn the strategies of FURU'S, you can finally defeat them and become a master Forex trader. All right, so the moving average. Okay, let's get an understanding of what the moving average is first. So let's look at this bottom picture here where you see this 10 SMA. All right, so moving averages are simple. Okay, instead of spending $249.95 to learn what a moving average is, all you need to know is above the line you buy and below the line you sell. Simple, right? I know you're like, oh man, what if we get faked out? Hey, that's just a part of the game. You're gonna have to learn how to read a chart. You're gonna have to learn, maybe you don't even want to play your moving average too close. Maybe you want to not have a 10, maybe you want to have a 25, maybe you want to have a 50, maybe you want to have a 200, maybe you want to have a mix or a combination of both. Some people mix it all the way up. Some people have a SMA and an EMA. So a simple moving average is basically just which is the average price over a given number of time periods. So every time a candlestick moves, the moving average extends itself. All it is just an implication of where price has been over a given number of time periods. Okay, so the exponential moving average just gives more weight to price. Now you can adjust the highs and the lows. You can adjust if you wanted to touch the opens or the closes, but in simplest form, the moving average is simple, and it's really simple to understand. Above the moving average you buy, below the moving average you sell. All right, so the simple moving average is usually like used on higher time frames. So then you'll see like the 50, you'll see like the 200. Some people have like the 200 and have that on the 4-hour type time frame, and then when they have that on the 4-hour, it's much easier to read. You'll see a bullish trend, you'll see green candlesticks printing, and then you'll see price above the 200 SMA as well. And you're like, oh man, price is still bullish, it hasn't broke beneath the 200, so you may continue to keep buying within that trend. It's just to signal a trend. All right, so that's moving average, simple versus exponential. Okay, now next, how to read a moving average. The easiest way to read a moving average, like I was telling you, above is you're looking to buy or go long, and yeah, there are fake outs, but reading and understanding your candlesticks go a very long way. Okay, so below you look to take a sell or a short position. Okay, so as you see in the example below, and all of this, the reason I'm giving it out for free is because all of this comes from baby pips. So this is all baby pips and shit you can just find over the internet, just free info that's just there. You just need to, I guess somebody needed to put it into a video like this so you can understand it, so you can really be like, because a lot of people are like, oh, where do I find this, where I find that? But really, Forex is so simple. It's so simple. But the basics of your Forex courses come from this right here, and I'm giving you the juice. So if you wanted the ingredients to the tacos, this the ingredients to the tacos right here. All right, so moving averages are frequently used technical indicator in Forex trading, especially over 10, 50, 100 or 200 day periods. Okay, so when they say day periods, they're talking about every single day it's printing another piece of that moving average. Every single day it's printing a candlestick. That's just looking at the moving average on the daily time frame. That's why it's saying over day periods. It could be hour periods, it can be minute periods. So it depends on where you're looking at that moving average at. All right, moving along. All right, understanding the Fibonacci. Okay, so this is another piece of people's system. Sometimes you'll see they'll have like a Fibonacci and then a moving average cross, or 10 SMA, 30 EMA cross, or 10 SMA, you know, however they want to do it. You know, it's ways, it's different combinations. All you need to know is the keys to the game, and then you can put your own combination, own swing to it. But understanding the Fibonacci, so the fib can be broken into many parts. Okay, but the simplest way to understand the fib is just to understand what it is. All right, so what is the Fibonacci? It's a tool used to just show key levels in the market, you know, usually just like old support or resistance. Sometimes it shows new support and new resistance. Okay, so you put the fib up and it's just to show like it's reversal point, or it's to show a point where people think, okay, this is a psychological level, this is where we're all gonna close, this is where we're all looking for price to go, you know. So when people take profit, you'll usually see price get to old resistance or old, you know, support level, and then start just consolidating. I mean, it's indecision because it's a psychological level. Usually it's like a Fibonacci level. So yeah, there are key levels that investors look for most with the fib, which is like the 38.2 or the 50 or the 61.8 for take profit levels or reversal points. All right, so right here you see like the 50, like boom, price gets to the 50, boom, it gets to the 50, people are taking profit, they take profit, it reverses and keeps going back down to the downside. And then if you looked at this on a higher time frame or a lower time frame, then you would see like, oh well, here's another place where we may be able to enter into, you know, the lower high of that trend. All right, so Fibonacci key levels. All right, now I do have everything on the right hand side, you can go ahead and read it. So like I was saying, in these examples you'll see the Fibonacci in action, all right, on an uptrend from the swing high to the swing low. Price bounced off the high and is retracing. All right, so example I'm talking about is the example up here. All right, so you see how price basically went up to this high over here, and then it said resistance term support at 1.0510, and then that point 1.0510 is actually at the 50 on that fib. So that's where they're saying price is gonna come boom to the fib, but it's a psychological level, you know what I'm saying? So the Fibonacci just levels price could retrace to, and psychologically investors and traders feel it'll always hit these top, you know, 3 levels, you know, which is the 38.2, the 50, and then the 61.8. So then we get into this next bullet point, the 38.2, the 50 usually is like a main target, okay, or the 61.8, which is like a target 3, you know. So those are supposed to be like great levels. You see it getting close to that 61.8, it's like, oh man, price is getting close to the 60.1.8, you know. So you know a huge reversal point may be coming at that level. All right, and then also you can add in your little MA crosses, like I said, and whatever else you want to add in, your little stochastics or whatever you want to throw in with your mix. But you have to get a basic understanding of your tools. Okay, you sharpen the tools in your shed, you'll be really good at digging. Let's get it. All right, think of the fib like shooting a shot off the backboard. Okay, let's get it. Once again, these pictures were provided to me by Baby Pips. All right, then I got some off of Tumblr, some off of Google, you feel me? So a lot of just open source information that's just out there. So I wanted to put this together because I really felt this was good. All right, so supply and demand. Now, a lot of people, I know this is in Forex courses too, they sell this hoopla. They supply and demand. Look, supply and demand is just another form of support and resistance. All right, the premise behind the supply orders is that when price accumulates in a zone where price is near resistance and gathers, it becomes supply. You sell the supply. All right, so you see stops or shorts positions, you see that supply zone right there. And then I got this off of Google. I guess IG put their tag on it, or it could be from IG, the broker. But like I said, boom, I got this image right off Google. So I mean, that's why it's free and it's open source, you know, to the public for you guys. But basically, boom, supply and demand. So you see as prices just hitting that supply zone. Look at the candlesticks wicks just hitting that supply zone. Boom, just popping against it. And it's like, let's say you didn't have a supply zone there and you just had a what? resistance line just right there? Would it not be the exact same thing? Okay, so then boom, when price is in demand zone, you'll see volume bars. Sometimes people use volume. What I'm talking about is just other tools that, you know, traders use, you know, to further their analysis. There's all different types of tools that you can use to really just push your vibe to the next level, you know. But first you have to understand the candlesticks, your Japanese candlesticks, understand what you're reading, and then you can add tools to your mix. All right, so when price is in the demand zone, you'll see the volume bars turn green, and depending on the strength, you know how many orders are entering the market, thus creating demand. And then where there's demand, then you look to buy or you look to go long. All right, so that's why you see some people have like, or some analysts have like the volume at the bottom. You start seeing volume stack up, and I mean, it's like I said, I've been around the game for a long time, you know what I'm saying? So that's why I'm able to just buzz down all of these tools, because I understand the tools. So sometimes people be sending me charts and stuff. They were like, oh, what do you think about my charts? And because I can read and I know what's going on, I mean, it's like I'm reading the tool and I'm reading what's going on, so I can even double and triple check my analysis just off the tools that, you know, people are sending me in a different type of scopes and in ways they're looking at the market. You know, I mean, everybody looks at the market in different ways, but what's cool is if you can understand the game and really understand what you're reading, understand and read and understand, you'll literally take your game to the next level. All right. So boom, support and resistance. So supply and demand, support and resistance. Supply and demand, support and resistance. Okay, look, support and resistance is probably one of the easiest ways to trade Forex. All right, the market doesn't always technically respect, you know, the technical analysis, but when you group it together with other insights, you will get to see the market much clearer. Okay, so as you see resistance just popping against the top of this line right here, just like you seen in that, what was that, supply zone? I mean, just saying. All I have to do is just add a rectangular box on top of there, and now it's a supply zone, you know what I mean? But boom, resistance, right? So resistance, you already know when price gets to the top, if it doesn't break through that price point, then what starts to happen? We start to get resistance. It starts to retrace. If you go to a smaller time frame and you start seeing those candlesticks start printing red, you start selling that joint. Okay, easy call. So the more time price wicks off a certain area, it'll let you know the temperature of the support area or the resistance. Same thing with support or if you were at a rectangle right there, then you'd be like, oh, it's a demand zone, you know. But like I said, man, support, resistance, and look, supply and demand, support and resistance, supply and demand, support and resistance is the same thing. So I mean, in that zone, once price is not just breaking through that bottom of that point, it creates a support area, and all you go ahead and do is just you buy off support, you know. Simple support and resistance, simple S&R. Okay, boom. So the truth about supply and demand. All right, so if you put both supply and demand together alongside support and resistance, you will see the similarities. Initially, they're the same thing with a few rules that you can bend to your own liking. All right, so I mean, there's different ways that you can draw your supply zones. There's different ways you can draw your demand zones, meaning that you can, you know, cut through some candlesticks. Support and resistance kind of just sits on top of the wicks. It doesn't necessarily cut through all the way. Like sometimes it cuts through, but it really tries to sit on those wicks. But the supply and demand zones, because it's like rectangular type of boxes and zones, it's like a zone. So you can actually use this whole zone as you're looking at the market. It's pretty cool, you know what I'm saying? So it's like you can bend the rules to your own liking. Okay. So in the supply area, you'll see price gathering in a certain area over time, candlesticks accumulating, and then the pressure starting, also engulfing candlesticks starting to initiate the push to the downside. Sometimes you'll see those engulfings starting to push to the downside. Sometimes they're just Marubatsu. Sometimes they'll just print, you know, spinning top, a small little Marubatsu, spinning top, a small little Marubatsu, just, you know, small candlesticks until it gets to its destination. But you really just have to trade what you see. All right. Likewise, in a demand zone, you will experience the same thing. Okay. Price gathering near or on support. Great place to look for long positions. All right. So the stochastics. All right. So you're like, man, the stochastics fire zone. Like, man, I think I gave you the stochastics in the what was that? The gold video. You feel me? But I'll give it to you again. So it's different variations of the stochastics. The settings that come with it is 5, 3, and 3. So the whole premise of the stochastics, you'll see all type of strategies with this too. Somebody probably had a stochastics and then throw the moving averages in there with the stochastics, you know what I'm saying, and then the Fibonacci, and try to throw some confusing jargon in there, confusing, and be like, I got the new strat. This is the new strat right here. This that mix. Like, nigga, I already know how to read what you talking about, bruh. Hey, hold on. First off. Shit. So look. So check it out. So fire zones. Okay. The zones. The one I'm gonna start at the bottom down here. Usually I was gonna start at the top bullet, but right now I'll start at the bottom bullets because I want to speak about the zones. So the 80, the 100 and the 80 is the overbought zone. Okay, usually in that area you're looking to sell. Okay, so you don't just go off of strictly what's inside of these fire zones every single time. What you need to do is you need to be able to read the market, understand what you see, and usually if it's spot up, you see what's going on, you like, okay, it looks overbought, okay, cool, it's overbought, and it's inside of the zone right now, and it's printing these candlesticks, and it's, you know, it's going through your scope of analysis, and it's matching all your rules of entry. You go ahead and enter a short position. Okay, meaning you sell. All right, if it's in the 20 and the 0 zone, meaning that it's in the oversold area. Okay, meaning that price is pretty much at the bottom right now. It's at the bottom of the barrel. You're looking at that oversold area. It's in that 20 and that 0. What do? Boom. You're looking to go ahead and buy that sucker out of there. Okay, so those are the fire zones. All right, so what's cool is this is like one of my favorite old time strategies. I've used it in numerous systems on my way up. Okay, the stochastics, there are many variations and settings that you can use with it, but the overall premises is like, look, when it's in a hot zone or it's overbought, you sell. When the price is oversold, you buy. Okay, super simple. Now you can stack indicators inside of here. Like literally making strategies is so dope, you know what I'm saying? Like I feel like this video is gonna unleash a lot of beasts in the game, and shit, respectively, I can't wait to see y'all win. All right, let's get it. So the news strategy. Okay, so trading news is simply being alert to what's going on in the marketplace. Now this is really risky. All right, so if you don't want to blow your accounts, a lot of people, you guys don't know what you're doing. You try to go all in on news and you really don't know what you're doing. You need to literally learn risk to reward before you even start messing with any type of news strategies. You need to learn risk to reward before you start messing with any type of strategies anyway. But I'm just saying, look, especially with news. Okay, so there's a few ways to play the news. Okay, so you can either have like buy stops, sell stops. That's like the set in the net. You know what I'm saying? Or they call it straddle trade, and buy above the range, okay, or sell below the range, and then you see range high right there, and then range low right there. All right, once again, just a picture right off Google. Okay, right off Google. You feel me? This is simple stuff. All right, simple stuff. All right, all you gotta do is understand the information, and then, you know, shit, information changes the situation. You know what I mean? Okay, but look, like I said, trading the news is simply being alert to what's going on in the marketplace. There are sites that you can use like MyFXBook or Forex Factory, Finviz.com, and similar sites, and they'll all achieve the same effort, and that's delivering news reports that impact the marketplace. So it's one thing to being able to spot, you know, a trade and be like, oh man, it's a good trade, but it's another thing to know why it moved as well. And then you're like, oh well, it moved because boom, this type of data hit the market. Was it high impact data? Was it medium impact data? Was it low impact data? Okay, so the market moves on data and the market moves on data, and news is one way the data can be influenced. Okay, one of the best ways to trade the news is to create a range or a net and wait for the breakout, see where it's going and move with it. Okay, now you can create numerous strategies around this, okay, but the whole premise of news trading is shit. It will break out. It is extremely volatile, it's risky, and you should have the proper risk management. All right. Okay, session-based news strategy. All right, so before we get into it, first you need to know the sessions, obviously, but what's cool about the news sites is that when you actually go to a news site like MyFXBook and you check out that economic calendar, you'll see that they have the sections of when that news is going to hit, and then also what type of news it is. You'll see what country it's coming from, or what currency it's coming from, and what currency is going to affect. So that's one part of this session-based news strategy, just, you know, noting and notating the sessions of which that news is hitting. Okay, that's a very strong aspect that will help you. Okay, so here we'll break down how to read the news. It's as simple as greater than, less than, and / or equal to. Okay, if you've ever been in a classroom where they've had the numerical ruler on top of the wall, well, that's how you read the news. So what I mean is, like, remember when you were back in school and then your teacher had that numerical number right there on that top ceiling wall. It started in the middle, it had 0, it was like 0, 1, 2, 3, 4, 5, and those were the positive numbers. And then on the contrary, on the left hand side, I mean, it probably went all the way around the classroom, you know, as much as it can count. But on the left hand side, it said -1, -2, -3, -4, -5, etc., etc., etc. Okay, so what's cool about that game is you got to think of news just like that. Think of news like a seesaw, right? So is it on that left hand side with that negative? Is it going to be having that negative effect, or is it on that right hand side and is it going to be positive? Okay, if news reports were previously negative, is it more negative? So is it going to be even more negative, or did that number recover a little bit and go from -100 to -50, which will make it positive because it actually gained? So that doesn't mean that it was worse, that means it was performing better. Okay, so that's the way to read it. So now that we got that part out of the way, I always change my news settings to high impact and medium impact. So the reason being is those are the only news reports that truly matter. They make the most noise inside of the marketplace. So you have to think, you don't need to have any of those bank holidays and all of that type of stuff on there. It doesn't really matter. Okay, other than that, like, it's really simple. It's just greater than, less than, or equal to all the way across the board. And it's great to know what each report means as well. So you got like NFP, then you got unemployment rates, you got Fed speeches, etc., etc., etc. Okay, so we're not going to get into what every single type of news is. I really put this video here so you could do your own research, develop your own strategy. If you have like a session-based news type of strategy, then you'll do more research to find out what news reports that you actually like to trade, okay, and what truly highly affects the market. Okay, so now as we read, let's go ahead and check out that previous. So do you see where it says previous and it says 38.3? Okay, and then the consensus was 38. All right, so the previous is just the previous consensus. The consensus is just the number that we're getting, that we're reading before the actual comes out. Okay, so is that positive or negative? When you look at it, well, it's a positive gain. So the previous is higher than the actual consensus. Okay, cool. So it only went -3 or -0.3. So in a sense, that will be, it seems like it would be negative, but we'll have to wait for the actual just because the number is so close. There's no drastic change. Okay, so 45.4 or 48, which number is bigger? Well, obviously 48 will be the bigger number. I know it's like, what, 4:28 in the morning that I'm doing this slide, so I got my greater thans and less thans messed up, but it's all good. So 48 is bigger than that 45. Okay, cool. Let us know that there was a drastic change just by 3, not really crazy, but it was only like a change by like 3. Okay, and the consensus, letting us know that we might be getting some positive news right there. The next piece of news will be equal to, so there's like a dud, nothing's really happening. Okay, the next piece of news, it went from 238 all the way down to 120, so that could possibly be some negative news right there, just because it went from a positive 238 to a positive 120. So that's like minus right there, so that's signaling, hey, we might possibly have some negative news coming up. All right, then you got that unemployment rate, 6.3%, 6.6. Okay, it actually went up. Okay, it went up from 6.3% to 6.6%. And then you got that market manufacturing PMI, that's just equal to. So you know, that's the way to read the news. Okay, so definitely when you're reading that, have that less than and greater than and equal to game in your mind, just so you know how to play that scale. Okay, so that's how I read it. And then also I take into consideration the type of report that is as well. So all of these, you can incorporate all of this inside of your trading plan. I feel like it's really good to know. I feel like this information right here will change your trading future. Shit, man, you already know it's your boy Ty and Trade Gang. What's happening?